Hello, I'm Piyush Dave, a fintech professional, and today I'm going to talk about what is the meaning of algo trading, why to go for algo trading, and what are the different strategy can be used in algo trading. So first, we will understand what is the meaning of algo trading. So when a mathematics meets a trading, it's called algo trading, and a computer is going to trade for you. It uses the basic mathematical concept, advanced mathematical concept. It do a lot of calculation. It works with a predefined rule, and it also calculates the worst case scenario, what can happen when the trade go against you. So the interesting part is a computer is going to trade based on the basic mathematics, the advanced mathematical model, and it is a calculation based system. It has no emotions and no fear. Now, why algo trading? So it has got no greed, no fear, emotion-free trading. That is the main interesting part. So majorly all the fund houses or big HNI clients or FII also choose the algo trading. Next part is it has a predefined logic. So we calculate this predefined logic by back testing. First, we backtest a lot of things. We check the worst case scenario, and then only we will go for algo trading. It is driven by mathematical model. So the risk is calculated, the reward is calculated in the start of trading itself. We can trade with live environment like live PNL we can continuously check. So if there is a loss is happening, we can put a stop loss, fixed target, fixed stop loss so that it saves your capital. Next part is it is faster than the manual trading. So normal manual trading require a lot of decision making capability, but in algo trading we have already predefined rule. So it is faster than the manual. It take decision very fast. It protect and preserve your capital. That is a very important part, because in normal manual trading the main problem is the emotions come into the calculation. So now here we don't have any emotions. So that's why it's flexible and very highly scalable. It has winning rate very high because we can combine multiple trading method together. That's a specialty of the algo trading. Now, what are the different methods which can be used for algo trading? The first method is mean reversal. So we will buy at low price and sell at high price, and vice versa. Sell at high price and buy at low price. So there are multiple mean reversion techniques available where we can do algo trading. Next is momentum and breakout. So momentum may be a buy side, momentum may be a sell side, or we can find a range or a smart range. And based on that, we can decide whether to go for buying and selling. Next interesting part is trend. So the logic is following a trend means we are understanding dominance of the market either on the bullish side or bearish side. So we will try to understand trend also. Then the volatility. Now volatility is to help to it basically help to understand how much volatile market may be. So it help for the risk control. So you can adjust your position based on the volatility. But if you're following manual trading, the main disadvantage is we cannot control the size as per the volatility. Even if we see the volatility, we keep on doing the same part again and again because we follow the emotions in manual trading. But in algo trading, it do a calculation on a minor level also, and it helps and works with only and only calculation and mathematics. Next, all the advanced and basic statistical operations we can combine in the algo trading. So quantitative methods can be applied, and these quantitative methods are very smart and take a data-driven decision. For the advanced pattern, we can combine the machine learning or even a deep learning also to understand the live data or historical data and to find out the patterns of the data. And it learn and adopt the pattern from the historical and live data. Now, all of this above, we can combine 2 or 3 strategies and we can make a hybrid or a smart system which have the stability and the great performance. Like I'll give you an example. In the mean reversal, one part is good and the trend, one part is good. So we can combine the mean reversal technique as well as trend following technique. Similarly, suppose I know the momentum, but I want to work with volatility. So we can work with both the condition. We understand momentum and we understand volatility too. Similarly, suppose if I want to work with some advanced system, I can work with machine learning and understand the pattern and adopt the pattern based on historical and live data. So the interesting part is maths plus discipline plus trading is the best combination. It saves your capital and in a longer term, it gives you profit also. So consistent profit, time to time exit, proper stop loss, proper target is a key point of algo trading. I hope this is clear to you. Thank you very much.